Welcome back. I'm Majid and this is Financial Crime Awareness Hub. We have covered all three of the first domains. Domain A on the risk and methods of financial crime. Domain B on the global regulatory frameworks. And Domain C, which was in two parts, covering the compliance program from CDD all the way throughout to internal audit. Today, we are finishing the CAMS exam series with Domain D, Tools and Technologies to Financial Crime. And I want to be honest with you about this domain. It's my favorite one, not because it's the easiest, it's actually quite challenging, but because it's most relevant to where compliance is going. AI, machine learning, blockchain analytics, RegTech, these are not future concepts. They are being used in compliance teams right now. And if you work in a modern financial institution, some of these tools are already on your desk. Domain D carries 20% of the exam, 24 questions, and it ties together everything we have covered across the other three domains by showing how technology makes the compliance work possible at a scale. Let's dive into further that, and I'll take you every single thing what we have to cover in this domain. Before we get into the tools, let me make one point clear about why Domain D is worth taking serious beyond this exam. There will be 24 questions from Domain D, and financial crime actually, doesn't stay still. The methods that criminals use, such as, structuring, shell companies, crypto mixing, trade-based money laundering, they evolve constantly. Manual processes and basic rules alone cannot keep it up. It's like you cannot cope up with these things. So the sheer volume of transactions in a modern bank makes it literally impossible for a human team to review everything manually. So technology is what closes this gap. And Domain D actually, test whether you understand how it closes it and whether you still, fall short. Is something I really, find interesting about this domain. Your real world experience in compliance actually gives you an advantage here. If you have worked in a transaction monitoring domains, so that's where you have an advantage. So if you have the how to clear the alerts, if you have dealt with the crypto related cases, you have already seen some of this in the practice thing, exams and all the tests you probably have attempted somewhere. So this video will connect what you have experienced to the exam language and concepts. So there are 24 questions, as I said earlier. Let's make sure you have already have some kind of a quick awareness and ready for all of them. So now let's start with the tools that sits at the center of every single AML program, which is the transaction monitoring system. Do you know how a transaction monitoring works? Actually, the idea is straightforward. Every transaction that flows through any institution gets checked against a set of rules or patterns. If a transaction or a group of transactions, fall outside what's expected for that particular customer, the system generates an alert. So a human analyst, who is there in the compliance, he has to then review this alert and decides what to do with it. So there are two things that you need to focus on. One is the rule-based monitoring, and the second one is the scenario-based monitoring. So let's look at it one by one. So first one is the rule-based monitoring. So that's the traditional approach, which is a rule-based monitoring. So you set thresholds such as, cash transaction above 10,000, any rapid movements of funds, multiple international transfers in a short period, and any transaction that hits one of those thresholds gets flagged. So the advantage of rule-based monitoring is that it's predictable and auditable. You can explain to a regulator exactly why a transaction was flagged because the rule is written down that way in the system, and that's how it is configured. So the problem is that criminals, learn those rules from time to time. If they know the threshold is 10,000, they structure the transaction at 9,500, so it won't catch in the system. If they know rapid movements is flagged, they slow down the timing. Rule-based systems alone are not enough nowadays. So, and they generate a massive number of false positive. So these are the alerts that turn out to be perfectly legitimate transactions. So in most institutions, somewhere between 90 to 95% of those alerts are them false positive. That's where enormous amount of time your compliance guy they are spending on the transaction monitoring that really doesn't carry any weightage, and you don't need to investigate these cases. Now let's look at the second thing that we discussed, scenario-based monitoring. So scenario-based monitoring goes a step further. So instead of looking at individual transaction, it looks at the group of transactions together as a pattern. A smurfing scenario, for example, would flag a customer who makes multiple deposits just below the threshold across multiple days. Even each individual deposit would probably pass a basic rule check. So scenario-based monitoring is much better at detecting layering and structuring behaviors, but it requires regular tuning. You need to monitor those scenarios and keep on changing and evolving as and when. So as a financial crime typologies changes, the scenarios need to be updated and to reflect new patterns. So now let's look at alert management. Generating alerts is only half of the job. Managing them is where most compliance teams struggle, and where most of your regulatory finding happens. So here's the reality. So most institutions are generating more alerts than their teams can comfortably handle that. So the volume is high and the false positive rate is high, and the pressure to clear the queue is constant from your management. You can say your head of compliance, MLR, or they are pushing you to clear those alerts as soon as possible. So this is where actually compliance risk lives actually. So there's an alert management life cycle, so which we need to understand how it happens. So when an alert is generated, it goes to level 1 generally, if again depending on the type of organization, how the setup is. So generally it goes to the level 1 analyst first. Their job is to do an initial review. Is this obviously a false positive? If yes, clear it, but clear it with the documented rationale, not suspicious, an actual explanation of why. If the level 1 review identifies something that warrants a closer look, it escalates to a level 2 analyst, typically more experienced with access to more information and more authority to decide. So then level 2 review actually that particular person, he performed the review and identify if it involves looking at the full customer file, not just the flagged transaction, such as the transaction history, customer profile, beneficial ownership, open sources searches, any negative media kind of a things. So then a decision to be made. Is there enough here to file a suspicious transaction report, or can this be closed with a documented explanation? Every step must be documented, every decision must be recorded, because if a regulator ever looks at these files, whether it was filed or not, they need to see that the process was followed properly. The exam point here is important. A transaction monitoring alert is not the same as a suspicious transaction report. The alert is the start of the process. The STR is the end result, and only if the investigation concludes here a genuine suspicion. So now this is the most interesting, I'm sure all of us nowadays, listening AI and compliance and all these things. Okay, so it's a one of the hot topics. So this is the area that actually generates a lot of excitement and misunderstanding as well at the same time. So let me give you a clear practical view from my point of view what AI and money laundering actually do in the AML context and where they still fall short. So how it works actually, so machine learning models are there which are trained on large volumes of historical transaction data. They look at the transactions that were previously flagged as suspicious, and these transactions that were confirmed as legitimate. So over the time, the models learn to distinguish between the two. So not based on a fixed rule that we discussed in the previous slide, but based on the patterns in the data. There are two main approaches. So one is that supervised learning, where the model is trained on labeled data, known suspicious cases and known legitimate cases. It then applies what it's learned to the new transactions. Unsupervised learning is something where the model finds patterns in the data without being told in advance what it's looking for, useful for detecting in new typologies that haven't been seen before. So the next thing is that how it benefits actually, so the key advantage of money laundering over rule-based system is that it can learn what normal looks like for each individual customer. So not just for all customers generally. If a customer always transacts in a certain way and that pattern suddenly changes, the model picks it up, even if the individual transaction don't breach any specific rule. So money laundering always handle network analysis much better than traditional systems. So that's where we have the advantage of AI actually. It can look at connections between accounts and entities, identifying a money mule network, for example, where individual accounts look clean, but collectively it shows a suspicious pattern. And it reduces false positives significantly because it's making finer distinction than a blunt threshold rule. So let's now look at what potential or possible limitations we have. So but here's what exam actually wants you to know. So AI is not perfect. There are limitations coming up repeatedly also. The first one is bias. If the training data is biased, the model will be biased as well. If historical investigation disproportionately focused on certain customer types or geographies, the model may overflag those groups even when they are not actually high risk. So second is explainability. For example, a regulator can ask, why did your system flag these transactions? With a rule-based system, the answer is simple. It's a breach, that's why it was marked. With a machine learning model, the answer is often more complex and technical. This creates a regulator, from a regulator perspective, it's a challenge also. So third is the data quality. So machine learning is only as good as the data it's trained on. Poor quality data, insufficient information sometimes in our systems, incomplete records, incorrect classifications produce actually ultimately poor outputs. It's simple, like garbage in, garbage kind of a thing. And most important is the limitations of all. AI does not make the filing decision. It's ultimately a human being does. The technology actually supports the analyst. It does not replace them. Now let's look at the next topic, which is on the blockchain analytics. So now let's look at cryptocurrencies, which has actually created a unique challenge for financial crime compliance. On one hand, every transaction on a blockchain is recorded permanently and publicly, more transparent than traditional banking in some ways. On the other hand, the owners of those wallet addresses are not automatically identified, which makes it more useful tool for those who want to move funds without being directly linked to them. So blockchain analytics tools actually bridge this gap. Let's look at how it works. So these tools actually trace the flow of funds across the wallet addresses and transactions on the blockchain. If the funds move from wallet A to wallet B, C, and subsequently, blockchain analytics can map that entire chain regardless of how many hops there were. So clustering is one of the technique. By analyzing these transaction patterns, the tools can identify that multiple wallet addresses were actually linked, which are controlled by the same entity, even if they have never been formally linked. If two wallets consistently transact with each other at similar time, they are likely connected. So there's another thing that is called risk scoring. So it is another key feature in a way. So wallets and transactions are scored based on their connections to know how risk actually is being posed, such as darknet markets, mixing services, sanction addresses, exchanges with weak KYCs. So a transaction that touches a high risk wallet, actually it inherits some of that risk. even if direct counterparty appears clean. So just to let you know, guys, that I'm working on a very detailed course related to digital assets and cryptocurrencies. I'm almost done with the one which is the basic one. It has also good amount of information, and I'll be launching this soon, and I'll try to create also a video, but at a minimum I'll be mentioning it on the LinkedIn page. So please keep on checking that LinkedIn AdviseCube LinkedIn page, and I will probably announce it maximum during this week time, inshallah. So the next thing is that what exam actually, the test. So the most important concept here is this pseudonymity, okay, versus anonymity. So crypto is a pseudonymous, not anonymous. Transactions are public, but wallet owners are not automatically identified. Blockchain analytics is how you identify them. Mixing and tumbling services, deliberately try to break the transaction trail by mixing actually, funds from multiple sources to obscure the original. And then blockchain analytics tools try to trace those these kind of transactions. Sometimes they can and sometimes they cannot. So similarly, you have heard privacy coins. Monero are specifically designed to make blockchain analytics as difficult as possible. There are known gap in current tools. The exam knowing this and may test it, but not too still difficult. But let's say the minimum one is the travel rule, so which says like blockchain analytics tools help identify which VASP, which is virtual asset service providers, and a counterparty wallet belongs to, which is essential for fulfilling the travel rule obligation on transfers above 1,000. Now that our next thing is that we're going to discuss is about sanctions screening technology. So sanctions screening is one of the most time-critical compliance process in any financial institution. When a payment is in the flight, you would say you have seconds or at most minutes to make a call. The technology has to be fast and it has to be accurate. So let's see how it works. So automated screening systems check customer names, beneficial ownership, counterparties, and transactions details against the sanctions list in real time. The list includes, probably I'm sure you have heard, UN Security Council list, OFAC SDN list, EU Consolidated list, the UK OFSI list, and various national lists. So screening happens at multiple points: at the time of onboarding, at every transactions, and whenever the list is updated. And list can be updated at any point in time without even advance notice. OFAC in particular has added names on its SDN, as SDN list with a zero warning. Your screening systems needs to be able to respond it immediately on such kind of things. So the second thing is that the name matching actually challenge. Here's where when it gets more tricky and technical, and on the other hand definitely interesting. Names actually are transliterated differently across different languages. Sometimes someone say, let's say I would say Muhammad, somebody will write with MU, somebody will write with MO, and so on. There are many similarities in that. So the same person name might appear in dozens different spelling across different documents. Your screening system needs to catch all of them. Fuzzy matching logic or fuzzy matching technology allows the systems to catch near matches, names that are one or two characters different from the designated person. But this creates a balancing act. Too sensitive and you are drowning in false positive. Too loose and you miss a real hit. Date of birth, national identity numbers, and other identifiers are used along the name to improve accuracy and reduce false positive. So true matches and false positive. So let's look at it. So this distinction is actually critical, both in practice and in the exam. A true match means the customer or counterparty is actually on the sanctions list. You freeze the transactions immediately. You do not process it, and you notify your regulator and the relevant authorities without delay. On the other hand, you have a false positive is a name similarity that on the investigation turns out to be a different person. But you cannot just click clear and move on. You must investigate it, document your analysis, why you concluded it. It's not a same person. A clear clear it with the full documentation. The exam will present you with the scenarios involving name matches. Your job is to identify true match or false positive. The answer determines everything that follows. Now let's look at RegTech, or a regulatory technology. It's a broader category of technology designed to help financial institutions meet their regulatory obligations more efficiently than manual process allows. It's worth understanding this category, not just as a tool. So it's like, transaction monitoring is one of the form of the RegTech. So is the sanctions screening as well. But there are 4 specific areas the exam will focus on. Let's look at the first one, which is the digital identity verification. So, such as KYC platforms that verify customer identity remotely, like document scanning, facial recognition, liveness detection. Instead of a customer coming into a branch to show their passport or identification document, they do it on their phone in few minutes. This is hugely popular nowadays and valuable for onboarding, speeding it up the customer experience. But the exam pointed important. Digital verification reduces the non-face-to-face risk. It does not eliminate it. The risk is managed differently, but not removed. Let's now look at the customer risk rating. So automated systems that assign a risk rating to each customer at the time of onboarding and then recalculate it continuously as new information comes in, transaction behaviors, adverse media, changes in PAP status, new beneficial ownership information. The exam point is that the risk rating must drive the level of due diligence applied. It cannot just sit on the customer file as a label. If a customer is re-rated as a high risk, that triggers enhanced due diligence and potentially, you have to monitor it continuously. So the third thing that we need to look at it is the adverse media screening. This is the tool that continuously scans news sources, court records, and public databases for negative information about your customers. Any criminal charges, regulatory actions, fraud allegations, adverse press releases. So the exam it's going to test you on these things as well. If there is an adverse media, it is a trigger for an out of cycle customer review. You don't wait for the next scheduled review. If a negative story breaks about a customer today, let's say, you have to review it today. The last thing that we need to look into that is the regulatory reporting. So there are platforms that automate the preparations and filing of regulatory reports like STR, currency transaction reports, statistical return. They reduce human error and speed up compliance with reporting deadlines. So the exam test here from the exam point of view is that the automation reduces the error, but it does not reduce accountability. The compliance officer is still responsible for the accuracy of every report that goes out to the regulator. Now let's look at data analytics in financial crime detection. So generally beyond transaction monitoring and AI, there's a broader set of data analytics or analysis techniques that financial crime teams perform. So the exam expects you to understand these, not at a technical level, but at a conceptual level at a minimum. What does each technique detect and why? So the first thing is that the network analysis. So network analysis maps the relationship between customer accounts, transactions, and counterparties. It's particularly good at detecting money mule networks, where individual accounts look perfectly normal, but collectively they form a network that's being used to move the criminal funds. Think of it like a map of connections. One dot on the map looks clean, but when you see that is connected to 20 other dots, all of which are connected to each other in an unusual pattern, the picture changes actually. The second thing that we need to look is the peer group analysis. This compares a customer transaction behavior against similar customers, same industry, same size, same geography. So if a small retail business is transacting at a volume that are 10 times the average of businesses in its peer group, that's a red flag worth investigating. The anomaly might have a legitimate explanation, but it needs one. The third thing that we now need to look at is the link analysis. So link analysis actually finds hidden connections between individuals and entities, shared addresses, phone numbers, email addresses, device IDs, beneficial owners such as, and many more. So information that wouldn't stand out in any of one of the file of the customer, but when they linked across multiple files, it reveals a network of connected entities. This is how investigators expose complex, shell companies structure. The connection is there. It's just spread across multiple files that no one has looked at together before. The second the thing that we now need to see is the time series analysis. This tracks how customers' behavior changes over time. A gradual increase in transaction volume, a shift of new counterparties, the transaction moving to a different jurisdiction. None of these individually might breach a rule, but the trend over time is the signal. The next is text analytics. This applies, to the natural language processing of, to transaction narratives, customer notes, and case files, scanning of for keywords, unusual phrases, and inconsistencies that human reviews would miss at high volumes. A payment description that doesn't, match the customer business. The same narrative wording appearing across multiple unrelated accounts. Text analytics find these patterns automatically and flags them for human review. The exam point again here is that it scales your team's capacity. It doesn't replace the analyst. The last we need to see here is the geographic analysis. So maps the flow of funds by geography. It identifies unusual jurisdiction patterns, high risk countries connections, and or through financial centers that makes no commercial sense given the customer's business. Now we'll see the next typology-based detections as well. So now let's look at the typology. It's a recognized pattern or method of a financial crime. Typology-based detection means building your monitoring system around those specific patterns, not just the general rules. The CAMS exam expects you to know the major typologies and understand how technology detects them. Let me run you through a couple of them. So the first one is the structuring and smurfing, which means multiple cash deposits just below the reporting thresholds, and either by the same customer or by the related customers acting together. Rule-based monitoring catches simply these cases. However, scenario-based monitoring is needed to detect more sophisticated structuring across multiple accounts and time periods. The second one is rapid movements of funds. Funds arrived in an account and leave within 24-48 hours with little or no balance maintained in between. The account is acting as a pass-through, a classic money mule pattern. Time series analysis and scenario-based monitoring are both useful here. The next one is round-trip transactions. Funds leave an account and return from different sources, in layering, so making the funds appear to have a new clean origin. Network analysis is one of the tools that catches this by tracing the connection between the outgoing and incoming funds. The next one, the most important one, is the trade-based money laundering, wherein invoice amounts that don't match the market value of the goods or services, such as over invoicing or under invoicing. We'll see this later. So it's these are the things that are used to move value across borders under the guise of legitimate trade. This one requires a specialist trade finance monitoring and often manual reviews. The next one is layering through the real estate. Layering through real estate is another major typology. Property is purchased often with cash, often through a shell company at a price that may be inflated or deflated compared to the market value. So the transaction creates a paper trail that makes criminal funds appear to be legitimate property proceeds. The tools that catch this are link analysis, which actually identify the shell company ownership chain, and network analysis, connecting the buyer, the seller, and the lawyers and the agents to see if there are hidden relationships that don't make commercial sense. The next one here is the crypto mixing. Funds are routed through mixing or tumbling services before re-entering the traditional financial system. Blockchain analytics is the primary tool, and even then it's not always be able to trace through the most sophisticated mixers. Privacy coins make them even harder. Let's look at now the new technologies that we have it nowadays. So now actually, domain D also asks you to think about the other side of the equation. Technology doesn't actually just help compliance, it also creates new financial crime vulnerabilities as well. The exam expects you to know the major emerging technologies. The first one that we need to look is decentralized finance. DeFi platforms, operates without a central operator. There's no bank, no virtual asset service provider, no entity you can require to implement KYC. Smart contracts, execute automatically based on their code. There's no human making a compliance decision because there's no human in the loop. This is currently one of the biggest regulatory gap in the entire financial crime space. FATF is working on guidance, but the reality is that DeFi compliance is still an unsolved problem. The exam knows this and will test whether you know it too or not. So it won't be tough probably on this, but there will be something on this as well in the exam. The next one is NFTs, non-fungible tokens. Wash trading is the big risk here. A criminal generally buys an NFT, sells it to a related party for an inflated price, and creates an apparent transaction history that makes the funds look like proceeds of a legitimate sale. High value, low regulation, and easy to do with connected wallets. The other one is like mobile wallets and sometimes e-wallets as well. High volume, it's fast, often cross-border, and with weaker customer identification than traditional banking. Prepaid products, such as prepaid cards in particular, carry actually placement risk. Cash can be loaded into a prepaid card, as we all know nowadays, with a minimal KYC in many jurisdictions. The next one is the open banking APIs. This is third-party access to customer account data. Actually, creates new vectors for frauds and data misuse. And when multiple service providers have access to the same customer data, the compliance responsibilities can become even unclear. Who's responsible for the AML check, the bank or the third party? The answer depends on the regulatory framework, and it's not always obvious. So now we are almost closing up this, and let's look at now how to study domain D. Three things that will make domain D stick in your minds. First one, understand each tool. So don't try to memorize technical specifications. Just understand what each tool does and what problem it solves. Transaction monitoring detects unusual patterns. Blockchain, analytics traces crypto funds. Sanctions screening checks names against lists such as EU, UN, and all, many of them. RegTech automates regulatory obligations. Then for each tool, know its limitation. Like, rule-based monitoring generates false positive and can be gamed as well. AI has explainability and bias issues. Blockchain analytics struggles with privacy coins. Sanctions screening produce name match challenges. Know the tool and know where it falls short. The second one, connect these tools with its relevant typologies. This is the core of domain D exam questions. For each financial crime typology, which tool detects it? Structuring, you can say rule-based or scenario monitoring. Complex layering networks, AI and network analysis. Crypto mixing, blockchain analytics. Hidden entity connections, link analysis. This matching is what the exam actually tests. The next one is, remember the human element. So every domain D question that involves a decision, file or not, escalate or clear, has a human making, that is, somebody is making a decision around here. So technology, supports the process. It doesn't replace the compliance officer's judgment. The most sophisticated AI systems in the world still needs a human to make the final call on a suspicious transaction report. And the compliance officer is not accountable for that decision, regardless of what system it is recommended. So before we wrap up this domain D, a quick word about us, as in like AdviseCube Consulting. The AdviseCube Consulting practice questions, as I have mentioned earlier, we have around roughly so far now 1,500 scenario-based questions across all 4 domains, including of course domain D. The domain D questions, are built exactly the way the real exam works. You are given a situation and you have to decide which tool is most appropriate, or what the correct response to a system alert is, or which limitation of AI applies in that scenario. Then we have prepared, some notes also, which are crisp for the CAMS material. It is concise. It's written for the people who study around a full-time having job, and it's difficult for them to read through the entire book. So we created these notes so that you can easily read through the specific, information that is really needed for the exam. The last but not the least, the course that we have designed is an e-learning course with an AI bot. This bot actually is purely trained on the CAMS material, and you can put your question anytime during the day. You can just let's say you have a question on how decentralized a finance works, so it will explain you clearly. In case, let's say, when you are reading a content in e-learning, if there is something that's not clear, you can ask that question. Bot will explain you that concept again. And last but not the least, we are available anytime at WhatsApp. The number is given on the screen, and there is an email address as well. Please feel free to drop us a message. Thank you so much. And that is domain D done, which means all 4 CAMS exam domains are now complete. Domain A, B, C, D, you have been through all of it. Let me give you a quick recap of full picture. Domain A, the risks and methods of financial crime, the 3 stages of money laundering, predicate crimes, high risk sectors, VSPs, the FATF travel rule. Domain B actually covers the global regulatory frameworks, FATF, 40 recommendations, UN conventions, financial intelligence units, the Egmont, the Bank Secrecy Act, EU, AML directives. Domain C covers building those compliance programs like CDD, beneficial ownerships, EDDs, PAPs, STRs, sanctions, training, compliance officers, roles and responsibilities, internal controls. And domain D, we covered transaction monitoring, AI and machine learning, blockchain analytics, sanctions screening technology, RegTech, and data analytics. If you have watched all those videos, you are in genuinely good position to understand the entire structure of the exam. The next step is the practice. Reading and watching takes you so far. Applying what you know on these scenario-based questions is what actually builds exam confidence. If this video helps you, please like it. It genuinely makes the difference to how many people the channel reaches. Subscribe if you haven't. More content is coming after that, because I'm going to explain all the concepts now one by one in the next videos. And leave a comment which one of the 4 domains you did find hard. I'm genuinely curious, and I read every single comments whenever you are sending any of your feedbacks. Good luck with your CAMS exam preparation, and I'll see you in the next video where I'll discuss CAMS exam study plans and different concepts going forward. Thank you so much once again.